Hello, I'm Joshua from Shockley Bookkeeping, and today we're going to continue talking about the different type of incomes we deal with and how they're taxed. Before we start, a quick caveat: some of the tips we discuss today will be general rules of thumb that we give to clients that may or may not be specific for your specific situation. It may not apply specifically to you. To find more about your specific scenario and how to best tax plan, you'll probably want to sit down with a tax professional for individualized guidance, but more on that later, okay? I'll be honest with you, a big type of income that we deal with here at Shockley is retirement income, which is some sort of distribution from a retirement account, and that's usually reported at year end on a form 1099-R. Okay, guidance on this type of income will depend very much so on how large the distribution is, but you want to make sure that something is being withheld in most cases. Usually we recommend 10 to 20% federal and then 4 to 5% state, but again, those are just very general rules of thumb and can change drastically by how large or small your yearly retirement distributions are. Another type of income that we want to quickly discuss is rental or royalty income. And the one thing that I did want to mention about this is that this type of income, there is no social self-employment tax, which really saves you about 14% right off the bat. Most of our rental clients don't live solely off their rental income. It's more of like a side investment for them. Honestly, after depreciation expenses, they probably don't end up paying much in tax at all on their rental income. For those who live off their rental income, probably going to fall into the estimated tax payment group of people that we're going to discuss in a future video. So more stay tuned for that. And then obviously the same with royalty income, no self-employment tax, and you're probably going to, if it's a large amount, you're going to have to pay estimated tax payment. We did want to quickly touch on Social Security income, which this year there have been a lot of changes to Social Security income and how it's taxed, and we'll hit the highlights here. If Social Security distribution makes up the most of your yearly income, there's a good chance that that Social Security income will not be taxable to you at all. But if you have a high retirement income coming in already, there's a good chance that Social Security may be causing you a balance due each year when you file your tax return. Most higher earning Social Security recipients don't realize that you can have the Social Security office withhold some taxes on each of those Social Security distributions to help ease that tax burden come April, so you don't get saddled with a huge bill all at once. There is a phone number you can call to get that set up, and usually 10 or 12% is a good place to start. Again, never fear, because if you withhold more than your tax burden requires you to, you will get the extra back in a refund come tax time. Also, a quick note, I always like to throw in some Oklahoma goodies. If you do live in Oklahoma, our state does not tax Social Security income at all. We're a very retiree friendly state, and that's just a little tidbit I want to throw in. Now, as we finish up, I did just want to say, if you need help understanding your situation, how to best manage your tax situation for any of the types of income that we've discussed today or so far, we do offer our first time 30-minute consultation where we can do some tax research for you and look at your prior tax returns and even your current year income numbers to see if you would benefit from some type of tax adjustments, withholding adjustments, stuff like that. Give our office a call, and we'd love to sit down with you. And with that, we'll probably be signing off until next time, and we will get more into different types of income in our next video as well. Have a good one. Bye-bye.